One of the most talked about news today is that Tesla Incorporated has lost its crown jewel status in Cathie Wood's main fund for the first time in about 4.5 years. To know more about this, stay tuned and keep your eye on the details. If not now, then when? That's the question that seems to be getting asked a lot currently regarding ARK Invest's stance regarding Tesla, NASDAQ TSLA. The EV maker has seen its shares drop considerably lately, despite one of its biggest supporters releasing its new sky-high price target. Last week, Tesla lost the top spot in the firm's flagship fund, leading me to wonder how much of Cathie Wood's conviction has actually vanished. Who is Cathie Wood, and why do her words carry weight? According to Forbes, Cathie Wood, an American investor, a star stock picker, and founder, CEO, and CIO of ARK Invest, a company with $60 billion in assets that invests in innovations like self-driving cars and genomics. Cathie Wood is often called the most underrated investor in the game, since not only is she incredibly persuasive in her investment arguments, but she's also got the proven results to back up her surprisingly discerning claims. Cathie Wood provides monthly updates about several things like monetary and economic policies, innovations, and what can be expected in her field of expertise, and comments on the Fed's decisions. The Federal Reserve System, commonly known as the Fed, is the central bank of the U.S., which regulates the U.S. monetary and financial system. In spite of the fact that Cathie Wood has more than 40 years of expertise in the investing industry, she started to become more well recognized on a larger scale in the year 2020. Her ARK Innovation Fund had a return year of approximately 150% in that particular year, which catapulted her into a level of notoriety that she had not before encountered. The ARK Innovation Fund has generated an average annual return of around 45% over the previous 5 years. Wood is also well known for the fact that she frequently makes bold predictions regarding the future. She's famous for putting together a fund company that focuses on emerging and disruptive technologies and thematic strategy. Her bold approach to investing and her predictions about Tesla have put her in the spotlight. Tesla's stock fell into an 11-month low on Tuesday, as a bearish analyst note added to a flurry of concerns about the electric vehicle maker and its high-profile CEO, Elon Musk, even as one of the company's staunchest bulls doubled down on its massive investment. For the first time in roughly 4.5 years, Tesla Inc. has lost its crown jewel status in Cathie Wood's main fund. Cathie Wood, the founder of ARK Invest, has long been a Tesla bull. Her price objective for the electric vehicle marketer's share is $4,600 in 2026. Tesla, on the other hand, is no longer the largest investment in the ARK Innovation ETF. According to statistics published by Bloomberg, Elon Musk's business has held the top spot by market value in the ARK Innovation ETF, an exchange-traded fund known as ARKK, on most days since at least 2017. That changed on Thursday when Roku Incorporated, a company with a market capitalization of $13.2 billion, took the top spot. According to ARK Investment Management LLC, statistics published by Bloomberg, ARKK had Tesla shares worth $703 million as of Thursday, last May 19th, closing compared to $717 million in Roku. Tesla's loss of star status in the ETF, like ARRK's 55% drop this year, is a reminder of the pressure on growth stocks from increasing interest rates and a darkening global economic outlook. It also comes after a 33% drop in the electric vehicle maker's stock this year, following a record high in 2021. According to Bloomberg-compiled statistics, ARKK Investment and its flagship fund have been dumping Tesla shares for at least 4 quarters in a row. As of the end of March, the company possessed over 1.59 million Tesla shares, down nearly 5.79 million a year earlier. The daily trading updates from ARK include just active management actions and do not include creation or redemption activity triggered by investor flows. ARK invests with at least a 5-year time horizon, and volatility in their equity is expected, according to Wood. As a result, many people wonder if Cathie Wood has dumped Tesla stock. However, there is no evidence that Wood has sold any additional shares in Musk's company, in contrast to her previous decision to reduce the amount of Tesla stock she owned in order to make room in her portfolio for investment in General Motors. Instead, it appears that Roku's share price growth organically pushed it, passing Tesla as Wood's greatest single investment. This occurred after Roku passed Tesla as Wood's largest single stake. Roku, a video streaming service provider, now has the title. It makes up around 8.4% of ARK Innovation's total holdings. Tesla, TSLA, makes up roughly 8.2% of the fund. The rest of the top 5 holdings are Zoom Video Communications, ZM plus 2.35%, at 7.9% Exact Sciences, EXAS, at 5.9% the Block SQ, plus 0.62%. At 5.7%. Tesla does not appear to have lost out of first place as a result of an explicit trading strategy. The relative rankings have shifted as a result of recent stock market performance. Tesla shares had lost 27% in the previous month as of Friday's trade. Roku's share price has dropped only by 12%. The tech sell-off has taken a toll on Tesla stock. The possibility of CEO Elon Musk buying Twitter has also created an overhang on the shares. Since Musk's original Twitter investment was revealed, Tesla stock has dropped nearly 38%. Over the same time period, the S&P 500 and NASDAQ Composite have lost around 15% and 22% respectively. The amount of work Musk has on his plate appears to be causing concern among investors. Tesla, SpaceX, The Boring Company, and Neuralink are all led by him. On Friday, Musk turned to Twitter to reassure Tesla shareholders that Twitter only takes up approximately 5% of his time and that Tesla is always on his mind. Wood's fund has been harmed by the collapse of Tesla stock, as well as other high-growth stocks. ARK Innovation, ARKK plus 2.16%, has lost approximately 23% in the last month and is down nearly 55% year-to-date. As interest rates have climbed, investors have shied away from the fastest-growing, most speculative stocks. High-growth companies earn the majority of their money in the future, and higher interest rates make those earnings less discounted back to today. One reason why increasing rates affect high-value equities more than others is because of this. In pre-market trade on Friday, Tesla shares was up around 2.3%. Roku's stock has increased by around 2.5%. Futures on the S&P 500 and the Dow Jones Industrial Average both increased by roughly 1% and 0.9%, respectively. Meanwhile, on March 29th, Morningstar analyst Robbie Greengold issued a scathing critique of ARK Innovation. ARKK shows few signs of improving its risk management or ability to successfully navigate the challenging territory it explores. Since its meteoric rise in 2020, the strategy has been one of the worst-performing U.S. sold funds. Wood's reliance on her instinct to construct the portfolio is a liability. Wood countered Greengold's points in a recent interview with Magnify Media by Tiffin. "I do know there are companies like that one, Morningstar, that do not understand what we're doing," she said. "We do not fit into their style boxes, and I think style boxes will become a thing of the past as technology blurs the lines between and among sectors." Recent developments have resulted in a drop in the price of Tesla stock, bringing it to its lowest point in several months. To begin, the COVID lockdowns in China have led in a decrease in output in Shanghai this quarter, which will likely have an impact on Q2 results. Elon Musk's offer on Twitter has also alarmed investors, prompting him to sell another block of Tesla stock. Elon Musk sold another block of Tesla shares as a result of this bid. Cathie Wood's confidence in Tesla seemed to be fading in the end. Despite putting a new $4,600 price target on Tesla last month, ARK Invest has been selling the stock in recent weeks. This isn't the first time the company has been enthusiastic about the stock, only to sell a large number of shares the next day or shortly afterward. Despite a sub-minus $700 finish on Friday, Tesla's weight in 2 of the 3 ARK ETFs has dropped to multi-year lows, with no signs of purchasing. Regardless of the fact that Tesla has a lot of potential upsides, Cathie Wood and her colleagues don't appear to be very interested in it right now. If you like this video, give it a thumbs up. Make sure to subscribe and click the bell button to be more updated with Tesla stock news.